Hello to all traders and welcome back to another market review brought to you by Orbex. So we're looking at the indices today after the S&P and the Nasdaq were hitting record highs, but it's the Dow that everyone's been talking about after hitting a 9-day losing streak, and it hasn't happened since 1978, so quite a big anomaly. And what's more interesting is, big tech companies like Nvidia are also in corrective phases, and they joined the group of the Dow 30 in November. So this is what we're looking at. And is it going to continue? We've got the Fed really started to shake up the markets as well. They're expected to cut by 25 basis points, but it's all about the tech stocks and seeing where we can go next. So like I said, the Dow, let's look on the daily chart for the Dow, and we have, since 1978 quite significantly, and we've opened up on a little bit of a bullish note today, but as you can see, such a big dramatic slide. And if we pull it all the way back, we have had correction after correction, but they have been filled by a few bullish candles on the daily chart, and obviously hitting this record high above 45,000 has now seen it quite detrimental, turning towards 43,000. So quite a few points shedded from the Dow Jones. Let's go straight onto the 4-hour chart though. We're just seeing now where we can stop this bearish continuation. But for sellers making money from this, it has been very, very fruitious, and we're just waiting to see now. As I said, all eyes are on the Fed, where they're going to go next. The last big piece of fundamental news before the end of the year. So we're just waiting to see where we're going to go in the new direction. So our stocks really anticipating Donald Trump's next 4 years, or are they taking a bit of a back seat because stocks were expected to start pushing even further on the news that Donald Trump will be the next president. So let's just take a look on the S&P, where we're seeing now it has plateaued slightly, just seeing a bit of a consolidated phase, but it is still looking very bullish, more so than the Dow, which is quite significant as well. So still holding the 6,000 level, which is quite important. If we do start breaking these big psychological levels, we could see quite a big dramatic sell-off later on in the sessions ahead. Obviously only a couple of weeks until we see out this year. Going into next year, we'll have to wait and see when Donald Trump is inaugurated, if he is going to have any big impact on the indices and stocks, as well as the dollar as well. But we'll look into that a little bit later on as we get a bit closer to the inauguration. Nasdaq, on the other hand, that had more of a spike to the upside. We saw very good continuation on the stocks making up the 100 list of the Nasdaq, but since then we just have had a little bit of a pullback, but nothing to worry about too much for bulls, especially after we've had leg after leg of choppy consolidation before another really big bull run. I mean, if we look at this particular last one now, we are seeing over 2,000 points being added. We did hold the 20,000 level, which was quite significant, went to 21, and now we are just hovering around 22, so quite significant there. But what do you think on the indices? What do you think on the Fed? Are we going to see any surprises? Are they going to hold? Are they going to actually have more of a cut of 50 basis points perhaps? We'll have to wait and see. But as usual, we'll bring you all the latest in the technicals and fundamentals. So stick with us, stay tuned, stay ahead, and we'll speak again next time around. Bye for now.